Good morning, everyone. It is so good to see you all on this Tuesday. And if you're watching the replay, thank you for joining us as well. So hopefully everyone can hear me okay. The lines are muted just because we are recording, but throughout the session, we will take a moment, pause the recording so that we can unmute it so that those that are online live can ask questions or make comments. And then what we'll do for the remaining of the time, we will you can put your questions in the chat if you want, or if you're watching the replay, you can also respond where you watch the replay, such as view on social media, Facebook, Instagram, LinkedIn. You can put your question or comments in the chat there, or you can email us and I will make sure that you all see that, get the email address, or you can simply go to the website, the same website you use to register for this event. All right, and just before I get started, as you can see, this is Martin Business Solution. I am Candy Martin, and we are presenting Business Bootcamp. This course generally is offered in person. We decided to do a little different, to do it virtually. We're in the month of July. People are traveling, kids are out, children are everywhere, and so we understand that sometimes coming into the office for a class setting sometimes may be challenging. And so with that, we decided to pivot this course online. Now we will still have the in-person classes. Some of them will be held at the office or at the university where we also do the classes there. So those classes haven't stopped. We just decided to also offer it online so that it gives everyone a chance. So if you have a friend or a family member that lives out of state or that lives across the street that you believe would benefit from this information, you still have time to send them the link, let them hop on because we're just getting started. And so a few housekeeping rules for those that are online with me. Please put your questions and comments in the chat during the break. I will make sure that I read every last one of them and respond to you all properly. And because we're all recording, what I will do out of courtesy, when we get ready to open it up for Q&A, I will pause the recording so that you can freely ask your question. So your question is not in the replay online forever. So not that you would that I would mind, but just to extend some courtesy to the client. So with that being said, if you can scan the QR code, it will keep you abreast up on the new classes that we have coming up. There will be some more classes added later this week for the remainder of the year. We have about 5 or 6 more classes that we're adding. And as always, I would say 99% of the time, the workshops and classes are free and complimentary, no cost to you, nothing to buy, because I'm not selling anything. So this is strictly for your learning. One thing I do ask is that you apply what you learn and that you share what you learn. Invite others, don't be a gatekeeper. There are so many other people that need this information. And I just, to be honest, I can't reach everybody. And so I do rely on the kindness of you all to share the information with others so that they may get the information as well. All right, so let's go ahead and get started. All right, just for FYI, so I don't forget, tomorrow, which is every second Wednesday, we will be doing a workshop for entrepreneurs. The topic tomorrow is taxes. Okay, so one of y'all favorite subjects. I know y'all just love doing taxes, love paying your taxes. So tomorrow we will go through some of the things that will help you reduce your tax liability, how to properly file your taxes as a business owner, as an entrepreneur. And for those of you who are considering a business, good for you that you are taking the classes before you start the business. That way you get to learn some tips and things along the way and properly beforehand. All right. And so that class is every second Wednesday. Now, it's not always taxes. Sometimes we talk about other topics and things of that nature, but because we're midway the year, I try to do this maybe 2 or 3 times a year. That way you can course correct anything that you need, find out what's missing, and get ready to prepare for those taxes. Those of you that file tax extensions, the deadline is coming up October 15th. And if you have a PLLC or an S Corp, your deadline is coming up September 15th. And for nonprofits, please get with your registered agent to find out where you fall. Because depending on what type, determines when your taxes are due. All right. All right, a little bit about me, just so that you guys know that I'm qualified to teach this class that we're getting ready to teach. First of all, I really love doing what I do, so I think that's more important than any credential that you'll see here. I am a licensed financial educator, a tax professional, a business advisor, wife, mom, Mimi. Mimi is one of my favorite titles. She's 6, so yeah, she keeps me in line. A daughter, friend, and I see some of my friends on here. I really appreciate you all joining in. It means a lot. Thank you so much. I'm a minister of the gospel. I teach at the Bible college at my church. I teach financial stewardship. Go figure. But that is the topic that they gave me to teach. So thank God for that. I'm a community partner. So if you have an event in your community, unfortunately, I'm not Jesus, so I can't be everywhere at the same time. However, if I can put it on my calendar, I can be there. So if you're having an event or there's something special going on that you think that it should be a part of, or if my clients, I'll share it. At least if I couldn't do anything else, I will share your event or your function. I totally believe in supporting other small business owners. I mean, that's really how we thrive. We are a community, so I am a community partner. And thanks be to God, I'm celebrating 27 years in business. I truly love what I do. You gotta love talking about taxes and investing and saving money, paying off debt. You know, none of that is sexy. So you really gotta love doing what you do. So I truly do it. And what makes me love it is the great clients that I have. All right, all right. I hope y'all have your pen and paper out. We are going to be working. This is called a workshop. Even though because it's virtual, I will be doing the majority of the talking, and it will seem more of a lecture style. However, I will put this out there. The in-person classes are more interactive, more engaging, because it's a controlled environment. People are there, and I love engaging. Whereas online, it doesn't sound that way if everybody's talking and somebody's watching the replay. It's like, oh my gosh, y'all know y'all watch those replays online and you're like, oh my God, well, who was in control of the sound? And so that's the only reason why it's not as interactive here. But however, I do welcome your question. And my last disclaimer before we get into the workshop is make sure that you consult with your financial advisor, consult with your tax professional, even your pastor if you have to, if that's your avenue. Make sure that you, before you make any life-changing decisions, that you have consulted all avenues prior to, and we do offer consultations at no cost. So even if you don't have a assigned person already, we welcome you as a new client as well. So let's get right into it. Financial education for small business owners is how you will build and protect your wealth. Oftentimes we have the skills, we're talented, can't nobody beat us doing what we do, because generally it is our God-given talent. It's something that we've cultivated, or it's something that we've been doing since we were little, or we just had a heart or a passion for others. We are problem solvers. And so some of the things that we do or services that we provide, it just seems as if it comes natural to us. So it's like a no-brainer, no thinking about it, we just do it. However, for every gift and talent or service that you provide, there's a business principle attached to it. There's some sort of, how they say side A and side B. A is for action, B is for business. And so oftentimes people just do the action. They do what they do and either forget about the business, don't know how to do the business part, or they table it. You know, they have the best of intentions that they are going to do it. So even if they even if you know how to do the bookkeeping or how to do the taxes or how to do the financial projections or the financial planning for your business, do you have the time and the discipline to do it consistently? And so that's one of the things that we're going to talk about on today. All of that is in there. So this is going to be, a few hours of us hanging together, walking through it. And what I would like for you all to do is to, even though you're muted and not necessarily full on engaging, I want you to engage. Put your answers in the chat, put the emojis there. Please take note. Do the work as we go through. And so, like I said, right before I get started, it's great to see a lot of you. Like I said, once again, great to see all my friends, my business partners. Let's get into it, roll up our sleeves and get down to business. So the first thing we're going to talk about is understanding some of the financial literacy for business owners. Oftentimes when we hear the phrase financial literacy, we think personal, we think kids, we think school, but it is also important in business because what you don't know will cost you money, okay? Proper protection. Your business is, like I tell a lot of people, it's your baby. You wouldn't leave your baby in a carrier outside in the weather unattended. And so oftentimes we do that with our business. We go in to the office for the day, we do what we're gonna do, and then we just leave. And there's just some things that are left undone. So we're gonna talk about protecting what we're building. We're gonna also talk about the cash flow. Who don't want more money? We're in business because we truly do love what we do. For some of us, it's the thing that we know how to do, and sometimes it's the only thing we know how to do. And that's not a negative. That just means that is your focus and you're doing it. However, and for the most part, it's something we would do for free. Hence that this workshop was free to you because for me, it's a labor of love. I love doing this. However, we have to have some cash flowing in so that we can manage debt, so that we can do the things that we got in business to do, provide for our family, provide for our community, sow into our ministries, whatever those things are. So you want to have the cash flowing, you want to free up the debt so that you're not in bondage and feel like, I'm just working to pay off debt. Nobody wants to do that. You want to have the joy in what it is that you're doing. And I'm going to tell you, cash flow makes you a little happier. We want to build wealth. Oftentimes businesses close when the matriarch of the business either pass away or sell the business or, just not in a position to do it because there was no contingency plans put in place. So we're going to talk about the building the wealth and the succession planning and how to build a legacy if that is what you choose. We're even going to talk about if you want to build the business to sell it. So and oftentimes we're small business owners, we don't think like, normally think that I'm going to build this business and I'm going to get the clientele up and then I'm going to sell it at some market value. We generally assume that is just for the Fortune 500, that's for people on Wall Street, but that is for mom and pop, solopreneurs, that is for me and you. If you choose to build your business so that it has a value where you can sell it either for a profit or just to be released of the business. That is an option too. So we're going to talk about that as well. Because I would say 90% of the time I talk about legacy because I'm thinking about leaving it to family. Well, we all know family don't always want to take on the business. So so what does that look like? Hey, you've been doing this business 30 years and now you're ready to call it quits. So what do? Do you just close the doors up? There's no sell away party or what? But we're going to talk about some of your options as far as doing that as well. So we're going to start talking about some core financial concepts as a business owner. And for those of you who know all of this and it's like, oh, this is a beginner's class, great for you. Stick around. We're in kindergarten and I plan on graduating you all by the end of this session. So like I said, we've been teaching these workshops since last year. And so each one, most of the time, talk about one part and we hone in on it and we really get down very detailed. But what I wanted to do today would give an overview of all the topics so that you can decide, hey, I need to learn more about this part. Because sometimes you don't know what you don't know until somebody exposes you to it. So the goal today is to give you exposure to all of it so that you can find where you fall short, find your weaknesses so that you can prayerfully attend another workshop that talks about that specifically, or, make sure that you button those loose ends up. And for the things that you know well, great. This will help sharpen that, and then you can even in turn share that with someone else. All right, so one of the things I want to talk about is access and liability. Of course, access are the things that we want. We want to accumulate those, that's your building, your land, your equipment, your name, the things that you have trademarked, all those things that have value, they add to the cash flow, the bank account, the portfolio, the investment accounts, all those things are your access. And those are the things that we truly do aim to have. And those are the things that we work to have. However, we also have liabilities. And so to properly identify those and not wing it, not just the invoice comes in and you're paying the bill. We want to talk about setting up a in and out sort of system, like what goes in, what comes out. The goal is, I don't care how much you bring in, how much of it are you keeping? So we want to make sure that as the assets come in, that the liability isn't eating it up, where you're left with barely anything or sometimes in the red and have no ownership. Irregardless of your business, if it's a tangible like services like makeup, or if it's a service where you're doing hair, or if you have products, sell cars, if you sell insurance, if you're a financial planner, a fitness person, provide transportation, whatever it is, you have some access that you own. You have things of value, but we have to properly account for the liability in every area, such as insurance, market volatility, all those things we're going to talk about. We're going to work through those. Network, knowing now, of course, guys and ladies, you guys are priceless, and there's no amount of money to put on your head. But that's not what I'm talking about. We need to know how much this business is worth. Um, I know that to us, it means everything, and there's no number that could trade what we do. However, for financing, for loans, for even for nonprofits, for donations, it has to have a value. Okay, so we're gonna get to that. We're gonna uncover what it is, taking the access minus the liability, and then we're gonna come with any indicators to see. And we're gonna do that for the business and personal. So prayerfully we can get through all of it today. All right. Cash flow, as I mentioned, that's the movement of the money or the medium of exchange. Because there's some bartering services that don't necessarily have money flowing, but it has a value system that it uses. So whatever it is to get your value system flowing, where the money comes in, money goes out, the positive is where we're trying to get to. And of course, making sure that we have enough for the essentials for the day-to-day operation of the business, as well as some savings, some money that's working for us, not just some savings account in some local bank earning 0.04%. But we're gonna get into all of that. And as I mentioned earlier, your business is your baby. So we're gonna talk about risk awareness, identifying and understanding financial risk, things that help protect your business and guide you through smarter decision making. And really quick, I'm gonna put this plug in there right here. If you're not, as a business owner, as an entrepreneur, or a person who's thinking about going in that direction, if you're not embracing AI, I encourage you to find a beginner's class, something real basic. You got to, not the bells and whistles. Don't be paying thousands of dollars. I'm talking about something you can get free online, maybe $25. Maybe Martin Business Solution will come back and teach a class or two, but if the demand is there for it, but take some sort of AI training. Because when I talk about risk awareness, a lot of, when you don't know, it's not because you don't know or don't embrace it or don't know how to use it, it doesn't mean that you're exempt from it. So there are some safeguards that you need to have in place as a business owner, where it's always been, due to technology or password protection, the things that we're used to hearing. Well, AI is just another level. It is a great system. I use AI. I embrace it. I wholeheartedly encourage my clients to use it. However, just like with anything else, if it's not used properly, or if there are others that are using it to mismanage to their fortune and to your disfortune, you need to make sure that you're protected. So make sure that you have some sort of basic AI training so that you can make sure that your technology, such as your computer, your bank account, your social media, things of that nature are safeguarded. We're not going to get into AI today. However, it is part of the risk awareness, knowing where the risks are. And right now we're seeing, because so many small business owners are like, hey, this is the way I've always been doing it. I'm not getting into that new AI stuff. I hear it all the time. And I tell them, even if you choose not to use it, know what it is, understand how to use it and what to be aware of, because just because you're not utilizing it doesn't mean that it's not being used. So I'll get off my soapbox for a minute, but that's how it is. I want to make sure that you guys know everything, and I'm going to do my best to just pour it all in today. I highly advise you guys to take notes. All right, so let's get on our first part, proper protection roadmap. We just talked about risk management, identifying and assessing, and what we're going to do to minimize risk to protect your business operation and financial stability. So one of the first things I want to talk about, I know next month we're going to have the business planning workshop where we actually put together a business plan with financial projection. All the fun, that's going to be the fun class. Like we talk about your social media, your brand, your favorite colors, what are some things you can do to help boost your sales. That's the fun class. That's next month. So this month, we're going to do some homework, and we got to really sit down and have some hard conversations about what it is that we want for our business. Let me move this out of the way a little bit so I can see. And so when I talk about risk management, I put that first because I don't want us putting all these things in place and we haven't done this part. Knowing what is your parameters around your business. And what I mean is, if you're doing social media, what are your password processes? If you have employees, have you done your hush clause or your NDAs? And a lot of small businesses, we don't do that. And what I mean, in any topic or any product or service that I talk about that you want more information on, please write it down. That is going to be in the survey that I send out. I want to make sure that I'm bringing you what you want. So I've had some people say, well, what is a hush clause? Or what is an NDA? Or why would I have a contract and it's just me and my cousin? We're starting this fitness center. Why would I have a contract in place? Or why would I have a hush clause? And so some of those things that small business owners we miss. And so I'm going to go through a few of those just so that we check off the box. So we're on our road. So when you're doing your risk management, you want to make sure that everyone that has access to your business, such as if you hire a virtual assistant, or I see this oftentimes, people will say, I'm not good at social media, or it's not really my thing, so I'm going to hire a social media manager. My daughter has a social media company, and so I see it often. I see it a lot of times. People hire her or other people, and they're just giving people their passwords. They're giving you people your passwords to log into, and I'm using social media as an example, but it's other things such as your login for your bill system or how you pay your vendors. So I'm just going to use social media because it is one of the more popular. But when you hire someone as a business owner, either as an employee, or if you link up with a vendor, or you're doing business to business, the business, such as saying, oh, I'm going to hire a social media manager to manage all of my social media. I just don't have time to do that. I'm busy doing the business. but I understand that I need social media, so I'm gonna outsource it to a company. And then you get with the company, you have your meeting, and you guys are putting things in motion. And one of the first things you have to do is give them access to the social media for them to manage it. And even if it's not a physical person and you're using an AI component, same rule applies. Make sure that you have your contract spelled out, you ask questions, you make sure that you understand. And number one, do not relinquish ownership of your account. For those of you that have, and this is another place too, when people have QuickBooks or some sort of online bookkeeping, they will relinquish ownership of the account to the accountant, to the bookkeeper, to the tax professional, or to the person that they hired, because it's easier to just make them the owner of the account so that they can have free reign to take care of everything. Let me tell you, I wish I had a bell. I would just be ringing it right about now. Do not ever relinquish ownership. Just as in social media, same with QuickBooks. I'll pick on QuickBooks and social media really quick. When you relinquish ownership, you cannot get it back unless that person willingly gives it back to you. The countless amount of times I've had people call me and they say, hey, I was working with this accountant or working with this tax professional and they were trying to do my taxes and I gave them ownership. And, for whatever reason, there was a fallout or the person just was out of business, whatever the case may be. It doesn't necessarily have to be anything bad, or they forgot it. I don't know, whatever. Those companies are protecting their business, and the rules are we do not exchange ownership. The ownership has to be done client to client. That way, they are not liable for handing over your life work to someone else accidentally, and rightfully so. If it was me and I had two people and I had an agreement and they had an agreement amongst themselves, I'm not getting in it. And so that's what the company says. So make sure that when you're doing your risk management for your business, setting things up, putting things in place, even with your banker, whatever it is, make sure that you assess all the risk and make sure that you protect your business operation and your finances. Number two, property insurance. And I believe we're going to talk a little bit more about this. If you don't have a brick and mortar, like let's say some people don't have a building, you don't have an office, you don't have a studio where you can physically go in, you're not exempt from this as well. You want to make sure that everything that belongs to that business is properly insured. And we're going to talk about the different types of insurance. That is definitely in the workshop today. And I think we're going to even touch on that tomorrow during the tax workshop. But if you don't have a brick and mortar, also your computer, your product, your name, your company name, protect that. For those of you who have brick and mortar location, make sure that you have the proper insurance and that you're not overpaying for insurance, that you have just what you need based on your zip code, your zoning area, and the level of protection based on what you are protecting. Now, once you have all of your basic and your necessities set, then you can look at, what, I want to have a little extra. I want to do some land yap. I want to go in and I want to use this insurance product to help me grow business and help me to earn income. Well, make sure that the basics is done first and that you're not overpaying for something that you don't need. Oftentimes, when people have brick and mortars, they do have some taxes and insurance and licensing that they truly don't need. For those of you who work from home, work online, make sure that you have the proper checklist and that all of your ducks in a row. You are not exempt from property insurance just because you don't have a brick and mortar, okay? And one thing about insurance, you want to make sure that you have something in place that helps you protect you from damage or loss, whether that's a physical building, online, and I'm talking about things such as, of course, weather related for brick and mortar, but think about it, whether you have a physical place or a virtual place, your name, your reputation should be protected. Errors, mistakes, especially if you're handling, well, I guess it could be any business, but if you're handling paperwork, you want an errors and omission. You want to make sure that every time you sign your name on something, that document is protected, because if your name is on it, that means you are 100% liable for whatever it is that's on that. So you want to make sure that you have your errors on omission. If you have a physical location, you want to make sure that you have something in place in case somebody trip and fall. In there, like I said, we're gonna get through the insurance part in detail, but I oftentimes have people tell me, well, okay, that part is not for me because my business is online. It is for you, okay? Business interruption. What happens if you're the business owner, you run the business, and for some crazy reason you get the flu? I don't know. We have another COVID situation. I pray that we never do. However, what happens when your business is interrupted? There's a mandatory evacuation because there's a storm brewing. I'm in Louisiana, so you'll probably hear me talk about hurricanes and storms a lot. I mean, it's just kind of like a natural thing. I know some parts of the country don't have to deal with that, but for us here in Louisiana, I mean, it's like always packing for hurricane or unpacking from hurricane. So it's just either way. But during those times, even if you have a virtual business, your clients are in transition. You have to pack up your home personally, or you have to step away. What happens when your business is interrupted? Do you earn income still? And I'm not talking about in a sense of like residual income for those of us that have put things in place to where we're getting residual income, going to get paid regardless. I mean, your day-to-day operation. Think about it. If you cannot physically show up for work, whether online or in person, who pays where does the normal, not even the extra money, where does your paycheck come from? As small business owners, we forget that. I know, like if we were working in corporate America or at a retail store and we had to take off work, they have those things such as like short-term disability. You can go in and fill out for that, or you have saved up PTO, paid time off, and you got it stacked. And so you can say, hey, I need to take 3 days off. Well, what happens when you're the entrepreneur, the business owner? What happens for you when you need 3 days off, or you have to evacuate, or you've fallen ill, or you need time off for bereavement? Where does the income come from? So we're gonna talk about covering the loss of income, and you want to make sure that you also have the funds coming in to cover your expenses. Because guess what? The light bill, gas bill, internet bill, phone bill, all that stuff is still due, whether you're earning money or not. And we want to make sure that you're setting your business up to where it can keep going and that you will not succumb to having to close. Do you ever realize like your favorite restaurant, like, man, they had the best food, people were in there all the time, I don't understand how it closed? One incident could interrupt the business. And if the business isn't prepared, that interruption can cost them their business. And I don't want that for you all. So let's talk about it. And then we want to have liability coverage. This shields the business from legal claims, lawsuits, third-party injury, property damage. Oh, it's unfortunate. But look, you love what you do. So don't let any of this discourage you or make you say, oh my gosh, I need to rethink this. I was thinking about starting a bakery. Well, I didn't know I had to do all this. Trust me, whether you're working for yourself or someone else, you're going to have a list of things you got to do. If you're in corporate America, there's a list of things you got to do, things you got to put in place, stuff you got to pay for, stuff you got to put up with. So you still got to deal with stuff. So just decide, are you going to deal with it for you and your business and your company, for your family and your legacy, or are you going to go to corporate America, which I am not against? Hey, you have a job, keep your job. Don't you go out here and quit your job. Like some people, when they teach entrepreneurs, they tell them, hey, quit your job, step out on faith. God got you. Just do it. You better have an exit strategy. I am telling you that, and I'm telling you that. I don't even know how I got on that subject, but don't let these things that I'm going over with you, talking about safeguarding your business and your personal finance. Some of these things apply dual. If I'm talking about risk management, check it for your family too. Liability coverage. Think about your home. A lot of these are dual. So, but I don't want you to look at this and get discouraged. I want you to look at this and say, okay, these are the things that I got to put in place. These are the things I need to double check to see if I'm correctly set up. Don't get discouraged. Take it one item at a time, one step at a time, and it will be okay. I promise you. Mhm. All right, so let's talk about an emergency fund essentials for small business owners, which isn't often talked about. We know in our personal finances, we hear all the time, make sure you have a financial emergency fund set up, you know. So we're going to talk about this from the standpoint of a business owner, and we definitely do want to have personal finances um, set up an emergency fund as well. However, for your business should not get its emergency fund from your personal. You personally should not be the emergency fund for the business. When the business needs something, are you the one personally going into your personal checking account, saving the business and getting the business out of trouble? That should not be the case, okay? It should truly be that the business and look, if you're starting up or starting over, or you've been in business 20 years and you're like, oh my God, I don't have one of those. This is not a condemnation. This is not a tear down. I am simply pointing this out. These are some of the things that you should have in place or at least consider. Your business should stand on its own, totally separate from you. Even if it is an LLC or even if it's a side gig, it still deserves its own set aside. So hopefully we can put those things in place today. All right, so in order to set that up, let's get pen and paper out, let's work it out. You would need to evaluate, what are your monthly expenses for the business? You have internet, you got Zoom, you got a cell phone, you have insurance, you got insurance and more insurance. You got taxes, if you have products, you have your products, you have your vendor fees. What is that list? What are all the things, if you took your last month, like I said, if you're watching a replay, but we're currently in the month of July. So if you take the month of June, take May and June, because sometimes, things kind of catch in at the end and the first of the month. Take the month of May and June and go through it with a fine-tooth comb. Now, I'm giving you tips and suggestions. So like I said, get with your financial person to kind of see how it works for you. But this is what I'm giving you today. Take your May and June, go through it, write down every single thing that went out. And I know we have our software, but I'm telling you, for this exercise, get paper and a pen. For my generation of folks that like, what is the paper and pen? This is paper and pen. Get your paper and pen, and I want you to physically write it all down. I want you to see it. I want you to feel it. And I want you to know what every penny went out for May and June. Whatever that number is, I want you to tally it up. No judgment, because some of y'all are balling. Y'all got it. Don't worry about it. And those of you who are not balling yet, don't worry, we're gonna get there. All right, so I want you to write it all down. Now here's the kicker. I want you to do it for your business as well as your personal, which means two separate, a list for your business and a list for your personal. Well, why would I want you to do your personal and this is a business workshop? Because as the business owner, as the entrepreneur, you are 100% responsible for your business. Remember, I said the business is your baby. You got 3 kids, but you got 4 if you count the business. You have to make sure that the business baby is well taken care of. You are personally responsible. And if you are going to think about getting any financing for the business, or if you have financing already and you may want to look at restructuring your loan or whatever you want to become, and I will tell you this, in August, or either August or September, we will have a government contracting as part of one of the topics as part of our workshop for the month, meaning that in order to get money with the government or to go to a bank or an organization, they want to know, how are your personal finances? And you want to be ready at all times to be able to take full advantage of any opportunity that comes your way. And if you should need funding or lending or investors, you want to get investors in, or you want to do business with the government, and they buy everything too, by the way. So if you want to operate in those spaces, your personal finances have to be buttoned up. I didn't say you had to have an 850 credit score, but you at least need to know where you stand. So one list for your business, one list for your personal, and it will all make sense in the end. And then once you have that total of everything that went out, I want you to take that number and I want you to multiply it by 3. Whatever the number is, that total for the month, multiply it by 3. That is going to give you the least amount that your business needs to have in its emergency fund. And then on the personal side, of course, same thing. Take that number, multiply it by 3. That is the first goal that you want to set, is to get to that number. And when I say the least, even if you just like, hey, I don't have $7,000 that I can just take in the bank and work toward it. If you got to start off with $7 a week, do what you have to do to get it going, okay? A savings account for the business and one for, and we're going to come back and talk about save it where. Just for right now, you just need to know what the number is. And if your business is a higher risk, you may need to have at least 9 months to be your goal. And what would be considered a higher risk business? I would say something like a truck driver, a beauty salon, a fitness center, restaurant. And what I mean by higher risk, meaning that, for example, we're online right now. My risk is real minimum. If y'all fall down, y'all at home, at your job, I ain't got nothing to do with that. If you are driving, please turn off your camera. I will say that. That's it. That's my risk right there. But if someone has to come into your establishment, your risk is greater. So you want to make sure, or if you're a truck driver, or if you're a beautician, and you're dealing with chemicals and people. If you're in the medical field, if you're an attorney, things of that nature, you want to at least have at least 9 months saved in your emergency fund. And that will help, not just in case of something you have to pay out, but if you're time off, think about it. If you are a beautician and you use your hands and you have to have shoulder surgery, pray that you don't, you're out for a minute. Your client's not going to braid their own hair. So you're going to have something reserved for you. Separate your funds. Oh, this is a big one. I know we're going to talk about this tomorrow for sure in the tax workshop, but I'm going to talk about it now. Make sure that everything is separate. Even if you rely on the business wholeheartedly to take care of you personally, have some parameters set up. Your bank account for your business should be totally different from your personal. And I'll even do you one more better. Sometimes I tell clients, look, your finances for your business and your personal need to be at 2 separate banks. We got to do, mine's all, I mean, look, we got to do what we got to do. That instant transfer stuff, that's a whole nother class. However, you want to make sure that you, for several reasons, that you keep your business finances totally separate. Whenever you go in for lending, for government contracting, or things of that nature, they will identify in your banking if you're truly operating as a business and you treating it as a business. And if they see that that you're doing a lot of personal purchases straight from the business, you're truly not treating it as a business, and they won't treat it as one as well. And here's another reason why you want to make sure that your funds are totally separate. In an unfortunate event, if you're being sued and your business is being sued, that you don't personally have to pay for it. For example, if your business is totally separate and someone sues your business, they are not entitled to your personal home. If you have your business separated and your insurance is in place, let me put that plug in there, that is totally separate. But if they can prove that you use your business for personal uses, all bets are off. Your personal and your home, all your personal belongings and your business are now merged together. So your car, your home, your land, your personal portfolio, financial portfolio, all of that now becomes part of the lawsuit. And I know first thing a lot of people say, well, I'm in business to make money to take care of myself. It still has a procedure. The business brings the money in, the business pays you. Hey, it's just you, great. It shouldn't be that much paperwork to get it done. Money goes into the business account, the business pays you personally. Do not use your personal debit card or your personal check or wire transfers or whatever to use for personal gain. Let the business pay you. And here's the beauty. You get to decide how much the business pay you. So the restriction is there to not use it freely, but there are no restrictions to how much you pay yourself. Um, so don't look at it that way. It is a paperwork trail. It is a way to separate you from your business. You know the old saying, documentation is king. You can say out of your mouth all you want, but that piece of paper slamming it down is going to shut up all whatever you say. So don't leave yourself open. Make sure that you separate, do not commingle funds. If you have in the past, if somebody reminds me on the next workshop or on the tax one, we can go through that process of how do you start over with that, or how do you put that in place if you're already up and running and you are commingling your funds and it's all kind of jumbled up together. There's a way to rectify that, but we can get into that in another workshop. And then you want to build consistently. Automate your monthly contribution, prioritize the fund that you have identified, like, hey, our emergency fund, this is, put it in some sort of order. We need to have 1 month saved. And then the next, just have some consistent plan. And it doesn't have to happen all at once. And consistency has nothing to do with amount. If you're saving $5 a week, so that when you get to $20, you can open up an account. Whatever the case may be, do what you got to do, but do it consistently. Let's say you're putting $350 a month away for your business savings. Great, that's a great amount. What if it's $500? You want to make sure that it's something that you're doing consistently, or in some cases, such as even in my practice, because I have a tax firm, the beginning half of the year, even though I'm open year round, but the beginning half of the year is where the cash flow is more prevalent. So I save more at the beginning than I do at the end. And so your business, or your quarters, first and third quarter, where you have better income flow, just get on some sort of rhythm and have it consistent. Don't skip a beat. And once you identify that you got something consistent and it's rolling, now you can start looking at your discretionary and making sure that, hey, I want to make sure that I'm saving $10 here or $1,000 here for family vacation next year. You can actually do those things, but it needs to be done consistently, business and personal. Make sure that it's separate. You want to protect and relinquish. Use funds only for true emergencies and replenish them promptly after any withdrawal. Meaning that if you have an emergency, use your emergency fund. Business owners and personally, when they have an emergency, they tend to use the credit card. The business has a credit card or a PayPal loan or whatever the case may be. If you have an emergency, use the emergency fund that you have built. And when things work out, then go ahead and replenish it. Even if you can't replenish it all at once, just get the rhythm back going. If it's an emergency, it's an emergency, and that's what it's there for. All right. So now we're going to talk about managing or mastering debt management. Now, I know that there are a lot of financial people out that'll say, hey, cut up all your credit card debt, credit card, and pay off all your debt. No debt. Well, that's great if you're not doing anything and not needing other people's money. However, if that is not your story and there is some level of needing responsible debt, then we're here for it. Everybody isn't in the same spot all the time. Give me 1 second. Everybody isn't in the same situation. So you want to make sure that if you have debt, let's say it's bad debt. I mean, you had to start this business and you just was borrowing money from here and there everywhere, but you had to get, because you know that this is what you're supposed to be doing. God clearly spoke to you, or this is the thing that you're doing to keep your family afloat. And so you did what you had to do. Okay, let's get a handle on that. Let's come up with a plan to get out of that debt, okay? Or it could be you have a plethora of funds, or your emergency fund is out the gazoo. It's like everything's great, but you have this awesome opportunity that does not require a cash purchase. It's not the situation to where you have to pay for it all at once because you don't know where you're going to get another check from. It's a situation to where you have your business is flowing, things are going along smoothly. And so you want to make sure that you take advantage of some acquisition. It could be purchasing some property, or some business is up for sale, whatever. And you have an opportunity, but why use your cash flow that you use for your daily operations, your payroll, your supplies, or whatever, to make the deal work if you don't have to? That is what's called responsible debt. It's part of the plan. And it's something that you would put in place to say, instead of taking this $100,000 and making this deal, why don't I spread this out over time so that the thing that I purchased can help me make more money, including the money to pay back the loan, okay? This would be a great place for a whiteboard. So I just need you to kind of envision with me. There's a property that you want to purchase for your business. You're paying rent right now. And so you're paying $1,200 in rent a month to operate your business. You get an opportunity to purchase a building. Purchasing the building and financing it, well, it's not a rent now because you're going to own it. The mortgage will cost you $600 a month. Well, think about it. You acquire the property. Now you're only having to pay $600 a month because now you no longer have that $1,200 rent, but you don't own the building yet, but you're paying $600 a month. You can take the other $600 that you just saved, pay off all those other debts, because now this building is helping you to save money, and it's also helping you to make money. Once you get those debts, now you can start saying, you know what, I got this extra cash. I can start paying $800 towards the mortgage now. And, and you did not take your $100,000 that you had to purchase it. And so now the business or the thing that you acquired is making the money to take care of itself. So technically you are not paying for it. All right. So don't take the money of your own when you have an opportunity to strategically structure it to where the thing that you purchase can take care of itself. All right. Know your debt and distinguish good debt. Like your investments, know the value. What is the interest rate? Bad debt, the things like, oh, I should have never got that loan. I had a client that said that he did not a payday loan. It was but for lack of a better way to explain what it was, something like that. And I think he borrowed, let's say, I'm trying to remember exactly what he said. Maybe well, it's good. I don't really remember that way. I'm not disclosing his actual situation. But the client had $2,500 that he got through this payday loan type system for businesses. What he didn't understand was each day he makes a deposit, they take 25% of the deposit until it's paid back. And then he didn't even know when is the end in sight. So that's considered bad debt. You definitely want to get out of that because it's just really eating away. So high interest or depreciating, things that don't hold value. So you want to know all about your debt. How much is it? When is it due? What's the interest rate? All the things about it. Prioritize payment. High interest debt first, using the avalanche method when you're working on paying things off. You want to use the avalanche method, which means you want to pay the high interest one first. Now, this may not also be the same case for you personally. I strongly suggest that you have a financial review with your financial educator to see what your particular situation is, but this is just a general rule of thumb. And generally, when I'm talking with people personally, I use the snowball versus the avalanche. So remember, we're talking about business here. So take the avalanche method because of the interest. If the interest rate is high, it's taking money from you twice, so to speak. So you're paying the note, plus you're also paying such a large chunk to interest. And so you want to use the avalanche method to pay down the debt first, the one with the highest interest rate first. You want to combine multiple debts into one, lower interest loan to simplify payments and reduce monthly burden. So for example, what would be something that you would want to combine? Let's say you own a salon. This is a great example. You own a salon and you have the hair dryers, the shampoo bowl, all of those. You have the shampoo bowl with one company, the hair dryers with another. Well, you could potentially get with a lender to combine those two loans because it's still the equipment, same type of equipment. So it will be the same type of loan. It will be an equipment loan. And they will combine it, and if it makes sense, meaning that if the interest rate would be lower, notes lower, somewhere in there that it made sense. And you combine those to get a lower monthly payment, or it could be a lower interest rate or a combination of both. And that would free up some income. So things that are similar, you want to consolidate those. Refinance wisely. As you start this journey, let's say you start putting yourself in a better financial position, and you start paying things off, and your credit score start increasing, and life is better. Income is just, business is booming. But it wasn't at first, and you got this horrible loan with this crazy interest rate or whatever. Now that you are in a better position, this may be time to renegotiate your loan or even transfer it all together to some other entity. And so you want to look at it and go through it. That's why I said the very first thing was you need to know what your expenses are, what your debt, what's the interest rate, when is it due, how much is it, what's the payoff. You want to know all those things so that when you look at it to see if it's time now to see about refinancing or paying it off, you know what your you know where you fall. And then you want to track your progress against your payoff roadmap. So once you list all of your debt, you can look back at it and say, you know what, I'm good with paying this one off. It's a low interest rate. I think I'm gonna just let this one run its course. Oh, but this one is horrible. I need to get out of there. Once you identify, you prioritize what get paid first, and then you consolidate what you can, and you may have done some refinancing. Now let's see about achieving some freedom from some of this stuff. Track your progress and see where you can pay off or and where you can redirect funds that you've reduced the monthly amount so that you can. So you want to put together a strategic plan so that we can start using those funds for your business emergency fund, for your business investments. You may want to upgrade your equipment. Whatever the goal is, we want to work toward that the same as we would in our personal finances. Just some of the things will be a little different, but it really is the same process, okay? All right, and I think after this slide, we got a break coming up, so just kind of hang in there. You guys are doing great, you're super troopers. So optimizing your cash flow. I think this is the one where everybody kind of wakes up, so I want everybody to scratch. When we start talking about, we want to get our hands working good so that when we start raking in all that cash, our fingers are working. So talking about cash flow, even I got happier, shoot. Talking about the cash flow. And the reason why I envision cash flow is because there are things I want to do for others. It really is. Now, of course, I'm going to take care of myself too, but I really do have a heart for the community. There's the things I want to do, things I want to do in my family. And so talking about cash flow just means I'll be able to do some of those things. So, and I'm sure that you all are thinking the same way. So anyway, or you might just need a vacation, okay? Like for you, whatever that is. So talking about cash flow, optimizing it, meaning we're doing we're maximizing, we're freeing up fluff, we're making sure we're not wasteful with money, and we're making sure that we're putting our best foot forward so more cash would come in. All right, so we want to monitor our receivable, track outstanding invoices, and follow up promptly to accelerate incoming payment. So if you have a company that allows your clients or customers to pay over time or to have an IOU, you want to make sure that you're tracking that. Oftentimes, when people aren't reminded of the debt, they tend to forget about it. You haven't forgotten about it, but you forgot to follow up. So you want to make sure that you know who owes you or what company owes you, when they owe you, how much, what are the expectations for the payment? Do you have a contract in place? What is the agreement? What can I legally do to enforce it if they choose not to pay me? You need to know those things, whether you have a brick and mortar business or online, you have a side gig, you babysit, like whatever it is, you need to monitor your receivables, meaning the receivables are the things that you are due to receive for a service or product that you have already rendered. You want to make sure that you follow your money, that you track it, and don't be afraid to ask for it. It's your money. All right. You want to track your payables, meaning the money that did, the money came in. Now you're responsible for paying somebody or a company. You have things that you have to take care of. So you want to manage your outgoing payments. When are they due? Now, I hope you all aren't just listening to me. I hope you all are writing notes and you're saying, you know what, I need to do that. Whether you're doing it with a spreadsheet, a software system, your cell phone giving you a reminder. Look, we pay for these things dearly. Let's put them to work. I always tell people, cell phones are great assistants. Use it. So the money that goes out, when is it due to go out? How do I pay it? Does it make sense? So you wanna make sure you have that. And you want to preserve your working capital, meaning that if the bill is due on the 15th, you want to make sure that it's paid on the 15th. But what if it's due on the 15th and you're paying it on the 1st when you got 10 other bills due on the 1st? Should you pay that bill during that first cycle or during your second cycle? So look at the due dates, look at the date that your income comes in, and pay the bill. Now, don't wait till the last minute. What I am saying, if you need more money on the front end of the month, perhaps you sit and look at when it's due and make sure that you're not paying too early. And it's never such thing as too early. But what I am getting at is if you're having cash flow challenges or if you're just building your emergency fund and your cash comes in 2 or 3 times in a month, when is the best time for me to pay this invoice or this vendor? Okay, you want to be strategic about it. Now, unless you have it flowing to where you pay everything on the 1st or everything on the 15th or everything on the 30th. That's why I say it's so important to sit down to come up with a strategic plan, not just for the money coming in, but also for it going out. Cash flow forecast. Now, this is one that if you don't understand it or don't have this in place, this is something you really should take a whole session. Because this one gets kind of complicated, but it's on here. This is truly a summary of it. Cash flow forecast. You want to project inflows and outflows weekly and monthly to anticipate shortfalls early. There's a whole lot that I didn't say in that statement. Your cash flow may take a year to identify, meaning that from January to December, your business has a rhythm, whether it's an all over the place rhythm or if it's a, smooth sailing rhythm. It has a rhythm. Or it could be, it's salsa in the middle of the year and it's slow dancing at the end of the year. And it can be rock out at the beginning, like your rhythm to your business is going to be different for every person. That's why I said this has to be done business by business or for your personal, individual by individual, because everybody's different at some point. Even if it's the same business, you're still separate in some kind of capacity. So what I didn't say in that statement is it may take you, if you're new to business, let me put it this way. If you're new and you're starting up and this is your first year, you may have to go the rest of this year so that in January, you can look back and see what are the inflows and outflows. What is the rhythm? We made more money in the third quarter. We made more money in the first quarter. Like what is going on with the business? Like, and you need to know that for a couple of reasons when you're doing asking for loans, government contracting, just saving, or just, for good business. Even sometimes in insurance situation, they ask loss of income. They may ask, hey, what was the flow? Like during the time of this accident, how much money do we need to replace? How much do you normally make during this time of the year? So you want to know those things. But getting back to building a forecast, another reason why you want to have a forecast is so that you can be prepared properly. That if you have something that you purchase every year in December, you want to know, if I start saving for this in January, how much do I need to save so that when December comes, I can purchase it, or I can take the CE class, or every year there's a conference and the conference is this date and I need to be at that conference. And so, these are the things I pay for. But also in the cash flow, we in that workshop, we do projections, we do what the business may make in 5 years, what the business will make in 10 years, how much is the business worth, how much did the business lose, all the things that you would need to know to have a good financial health report of your business, not just so in case you want to sell it, or if you need to get financing, or you want to do government contracting, but so that you know where you should be spending your time in your business. If the business is flopping, okay, then wait, maybe we need to talk about an exit strategy and closing it down. Or if it's doing great, how can it do better? We got to find out how they say, follow the money. That's really what that is. And that workshop, it gets very detailed into that. It has to be done on it's like all by itself, because let me tell you, numbers are fun when you're counting dollars, but it ain't fun when you got to sit there and do paperwork. So that's the type of class. Anyway, improve timing. This is another part of your cash flow. Align your payment cycles and billing schedules to reduce cash flow gap. In the situations where you're able to say, hey, I typically receive payments on my invoices on the 1st and 15th. Well, you may want to have your bills and your vendor purchases on the 1st and 15th. Why would you do it on the 20th and the 30th? And those aren't the days that, so you want to align your timing if possible, because sometimes you have to readjust your timing to match the vendors and the bills. But if there's any situations where you can get them on the same wavelength, that's great. And then you want to optimize flow. Implement strategies to sustain positive cash flow and reinvest the surplus wisely. Okay. That kind of ties into that cash flow forecast. You know, sitting down and figuring out, what items should I have in my business, because these items, the client purchase these the most. What thing I can eliminate that we really don't need so that could free up some cash. And whenever you identify some savings, where should you put it? Where can I put this money to make the most use of it, the most growth? Because remember, we're talking about growth and protection. We don't want to just talk about protecting what we grow, but we want to grow it as well. So reinvesting it, putting it somewhere wisely is very, very, very vital. All right. So what I am going to do, I am going to pause the recording so that if we have any questions first, we're going to do the questions first. Let me pause the recording. Recording, pause. Okay, let's see if I can get some audio. All right, let's try it again. All right, can you all hear me? All right, awesome. Thank you, thank you. Thank you, Monique, for letting me know that, and for those of you that put it in the chat, because I was on a roll. You hear me? All right, so let me start over. All right, let's go. All right. All right, so let's try that again. So if you scan the QR code, it's going to show you some of the upcoming classes. In August, we are going to be discussing, it's going to be back to school for, back to school. So it's going to be back to school for entrepreneurs, or to school for those that haven't started a business. And we will cover things such as social media, marketing, government contracting, pricing. And when I say pricing, that's part of that forecasting, knowing your value so that you can properly set your cost to increase your sales, or if you're thinking about selling or whatever. We're going to cover some of those topics, but what I was mainly getting at is if you scan that, you can kind of stay connected, and we will have multiple workshops throughout the year. Generally, October, November, we kind of get more into taxes and very detailed because we're helping clients and helping our audience prepare for the upcoming tax season. So you definitely want to be a part of that. And then, there's nothing like getting the education that you need. Estate planning, all those topics will be covered throughout the remaining part of the year. And I also mentioned that November, we will have an in-person workshop where you're able to come out and really just put your hands on things, and it will be in the New Orleans area right outside of it. So mark your calendar for that. So I hope you all enjoyed your break. You're gonna need it for the next part, answer some emails, and like me, kind of got a refill on the coffee because it's freezing in here. I don't know why they gotta have it so cold. All right. So the next part that we're going to be talking about, and for anyone that joining in on the second half, kind of missed the first half, don't worry, I'll make sure that you all get the replay link. But I will tell you there's nothing like attending the live workshop. So make sure that you register for the August one. August 4th is the date, 9 a.m. All right, so let's get into it. Building wealth, building wealth foundations and strategies, a stepwise approach to growing your business wealth sustainably through smart investment and planning. Investments, very first step, and these are not necessarily, that's why I always say, depending on where you are and what you're doing, this step may not be set in stone for you, but this is a good place to start. So invest profit. Remember in the first half, we talked about getting your emergency fund, getting your financial projections together, knowing what your debts are, getting out of debt, managing the good debt that you have. And we talked about freeing up some capital to save money. And so now we're ready to talk about, hey, I've taken care of all the needful things, and I now want to look at putting my money to work for me for my business. This is another stream of income. Whatever your business is, you're earning money doing that. So chances are you're already familiar with having multiple streams of income. And we're not talking about multiple jobs where you have to split yourself in more hours. We're already to the max with our availability. The last thing we need to do is to add on something with more hours. So investing your profits can do certain things for you. It can allocate a portion of your business profits into stocks, bonds, real estate for long-term return. And I'll put this disclaimer out here just in case someone didn't hear me the first 5 or 6 times I said it. Make sure that you're sitting down with your financial educator, your financial planner, your financial advisor to get their advice, because they know your situation specifically. And if you are looking for someone, the person that invited you, get with them. They potentially can be the person to help you or know someone that can help you. So, and always, Martin Business Solution, our doors are open But we definitely want to redirect you to the person that invited you. So, but let's get into this: stocks, bonds, real estate. There are so many other avenues, but this is just a few. So, like I said, make sure that it is pertaining to you specifically. And you want to diversify. Grandmama used to always tell us, don't put all your eggs in one basket. That is so true. I don't know if she knew that she was talking about diversifying her portfolio, but I do remember her saying, don't put all your eggs in one basket. So, because if you trip and fall, waste the basket, they all break, you have nothing. You get it, okay? So the same principle applies here. Spread your investments across different types of access. You want to make sure that you're in different financial spaces. You're not all in just one. Anybody that tells you, hey, we're the end all to be all, put it all over here, I want you to run, okay? Run real fast, all right? And you want to do that so that you can reduce your risk. So that means you have to take an assessment of where you are and take an assessment of what are your options so that you can make sure that you're reducing your risk. You don't want to leave yourself open for more risk and make yourself more vulnerable by putting it in a bunch of different places that aren't beneficial to you or the wrong places potentially. All right. And you want to have something that's stable. Even if you're into the high risk item, you still want to have a portion of your portfolio that's conservative and stable. And what conservative to one person may not be conservative to another, and what high risk to one may not be high risk to another. So that's why you definitely need to have a tailor-made plan for you and your business and the way that your business operates. That's why it's so vital to do that first part where we talked about what is the health of your business? What has been the growth over the last year? What are your expenses? What are your debts? All of that needs to be taken into consideration when we get to these steps. Okay. Reinvest. We talked about reinvesting. So reinvest dividends and returns back into the portfolio to leverage the power of compounding. If you're not ready to use the fund for something right then and there, reinvest your profits. And you can do that when you have it structured, as we talked about, knowing all your expenses, having everything paid, having that cash flow, your emergency fund built up for your business. And now the business has a surplus. Let's reinvest that into something, whether it's, and we'll talk about it later, whether it's life insurance, if it's dividends, if it's stocks, if it's bonds, if it's, high yield savings, wherever, put some of that back so that that can be a stream of income. It can compound over time. If you're putting it away and oh, I'm not going to need that until, 10 years from now, let it sit there and compound for you. I don't know if we're going to get into the rule of 72 here. I'm going to make my own self a note. If not, the next class that get this presentation will get it. So, and if you don't know what the rule of 72 is, make sure that you get with me or the person that invited you so that you can find out what is the rule of 72. It is so, think about it. Step 3, I need to know what the rule of 72 is. But back to this, you want to make sure that if you're not, like I said, if you're not ready to use it, that it's somewhere compounding to your advantage. Okay, that's very key. All right. Your tax strategy, which we're going to really get into some of this a little bit tomorrow. The class tomorrow is only 45 minutes. There's only so much I can do about that. However, the upcoming workshop, the tax workshop, is usually, depending on the schedule, will be around October, November. That workshop is really 2.5 hours of like, get your computer out, let's go through these taxes. Let's set ourselves up for success with the upcoming tax filing. So you want to use your tax advantage account and deductions to minimize tax burden and to maximize the net gain. Basically what I'm saying, you want to make sure that you have your business set up to pay the taxes properly, when they're due, how much they're due, why they're due. Because sometimes I find that people are paying taxes that they don't even have to pay because the business is not even required to pay that tax. So you want to make sure you're paying the right type of taxes for your business. And you also want to make sure that you're not negating taxes that you should file, because that can cost you money as well. All right. So you want to use, you definitely want to sign up for that workshop if taxes is a concern for you. We'll really get into it. where it talks about your deduction, making sure that you understand for your industry type what deduction you need to be claiming, filing on your taxes, and if this is the year for you to table it, the depreciation of something, or is this the year that you take it? Meaning that if the business did very well and all the ducks in a row and you don't really need the tax break because you can only use it once, should you use it later? Or hey, this is a rough year and I just need to take the tax credit now, understanding that I can't take it next year. So knowing your financial situation for your business, you can actually use the tax strategy to take it up to the next level, to free up cash flow, to increase cash flow. Your tax strategy can actually do that. And I'll put this in here because we are in July. Not, if we blink 2 times, it'll be 2027. So I'm not gonna just say, oh, we got time. Look, time is flying, let me tell you. So one of the things I will tell you, I know a lot of times people will say things like, hey, you know what? I'm gonna purchase this item so that it can be a tax write-off. Now, think about it. I'm gonna take cash flow, purchase something that I really don't need so that I can take it as a tax write-off. That might not make much sense. And I mean sense in both ways, with the S and with the C. Does it make sense? And then there are some things that you know that you're gonna need come January or come February. And you have the cash flow to purchase it now, and you could really use the tax break for this year. Go ahead and purchase that or pay for that so that you can take the tax credit in this year when you file your taxes come January. Because you have already done your financial projections, next year is going to be a much better year and you're needing to reduce your tax liability. Maybe you sold some property or you had some type of reason that's going to trigger a higher tax liability more than usual, then this may be the year that you want to take your tax break. But make sure that you do that, you use that principle of making sure it's something that makes sense. Purchasing something that you're not going to use is wasteful. It's not a tax break. Sometimes it's better to pay the taxes than to purchase the thing that you were going to do the tax deduction for. I mean, really weigh it out. And so there's some other things you can do with tax strategies. You want to determine should you pay the taxes now, later, or never. And what I mean by that, there are certain things that you, when you know how it works and how it properly sets up, this could be the case for your business to go ahead and pay the taxes now, take care of that, button it up, get it out the way. Or it could be something where, hey, this is something we can table and take care of and pay later. Or if I put this certain thing in place, I'll never have to pay taxes on this particular thing. So there are a lot of tax strategies, and that is truly a tailor-made strategy. It needs to be to your business and to you personally, specifically. Do not take a tax strategy based on the matches or something you saw on social media and everybody said, if you do step 1, 2, and 3, this is going to be perfect for you. May or may not be. Don't take the chances, don't roll the dice. Remember what I said earlier, when you sign documentation, that means you are 100% reliable and 100% responsible for that. And it's the same is true when it comes to taxes. Know what you're signing. Do not just give your taxes to someone, they prepare it, you sign it, and you go. Have a full understanding of what you're signing, why you owe taxes or why you don't owe taxes, why you're getting a refund, what could you do different? Well, you could reallocate, because remember, when you're getting a tax refund, they're not giving you money. That is a return on the money that you over invested into the tax system. The tax system is not paying you a really nice interest rate on your money. So don't overpay in taxes. You can take that money and put it somewhere else. And then you also don't want a shortfall and owe a lot of taxes or pay more than you should. That is money that you could do somewhere else. And oftentimes when a person owes taxes, it also comes with penalties and interest. That's another thing that takes away from your cash flow that you could reinvest into your business and put it aside for you and your family. So we definitely want to make sure that the tax strategy is tailor-made for you. It is not a cookie cutter situation. Even if your friend is in the same industry, doesn't mean your tax situation is the same. Trust me, after 27 years, it has not changed. Make sure that you're doing this case by case, specific for you and your business. All right. And everyone's favorite, we want to grow our wealth. We want to monitor your growth, your milestones, adjust your strategy, plan for sustainable long-term wealth accumulation. So fancy term for just saying, look, track your spending, watch where your money is going. Let's come up with a plan. Let's evaluate it at the end of every year. Like, hey, let's look back. We did this in first quarter. We did this in the third quarter. This we should cut out. This we should save. Are you having those conversations? Oftentimes, small business owners, especially when it's a team of one, do not do this part. Then, like this, like, okay, it's a new year. Then you just keep going, never sitting down to reevaluate where you were in that particular year. What went well? What didn't go so well? What should you do more of? If this was a restaurant, if you have a restaurant, why are you selling baked chicken and no one's buying it? You got a freezer full of baked chicken. That might be an indicator. We need to take this off the menu. So you want to do inventory of your business. What is working, what is not? What should you keep? What should you take away? And don't be so married to the idea of something because you like it, don't mean your clients like it. You know, you could say, I go around and I paint houses and I paint them all blue. But what if your client favorite color is yellow? Are you in business to do stuff for free or are you in business to earn some sort of income? So don't be so married to it that you can't evaluate it with an open mind. Now, of course, there are going to be some things you're going to plant your flag on, like, hey, this is what we're doing, absolute. But you also have to be willing to say, okay, look at the number. The numbers don't lie. Let's do our forecasting. And we talked about the forecasting. The forecasting will tell you where you should go based on where you were. So we have to do a look back so that we can look ahead. And that's how you're going to grow your wealth. You're going to adjust your strategies according to what is working, what is going to bring you the most gain. You are going to plan for, remember I said, even if you decide, hey, you know what? I'm gonna do this business for the next 5 years and I'm out, or I want to do something different, or I want to build this business to leave it for my family. I want to build this business so that I can put a price tag on it and sell it, and then I want to do something totally different. Like whatever your situation is, you want a plan that's going to work, a plan that's going to help get you there. So you have to be very mindful and put it on your calendar. You want to do a short weekly reflection. That could be something, take you 10, 15 minutes, kind of like just look at everything, make sure everything's like it's supposed to be, do your bookkeeping. That's about, if you can take an hour a week, you yourself as the owner, whether you have a CPA, an accountant, a tax professional, your high schooler who's good in math, whoever's keeping up with your books, you still want to be the one at the end of the day to sit down and look at it. And even if you're not going to really do anything with it, but you still want to lay eyes on it. Don't wait 12 months and be like, well, dang, I didn't know this was going on. Every week you should look at it. Every month you should reconcile your business. Every quarter you should be following reports or at least looking at reports, reading reports, doing something so that you can decide if you need to make some adjustments along the way. Once a year, usually in the middle halfway, you need to have your mid-year checkup. Hey, last year I said we were going to do this, this, and that. Are we on track? Have that. At the end of the year, like when we do that tax workshop, you want to prep for tax filing. Usually when you do the tax filing and you're prepping for it, it helps you have a better filing time, but it also gives you insight to your business because you're looking at numbers. The numbers will tell you how you perform. I don't care how great it looks on social media. I don't care how many people you have wrapped around the building. What are the numbers? How much of this money that you earn are you keeping? How much of this money that you earn is going to something wasteful? Or is there a lack thereof where you had to personally go into your personal account, put it into the business, which is not a bad thing if do what you have to do, but if you're not tracking it where you can repay yourself, put the money back, pay your investors, square everything away, we may need to re-strategize your plan. And so you want to do that, looking at the numbers, understanding them, asking questions, that helps you grow well. Not doing this is what's going to eat away at your wealth. I don't care how small or large your account is. All right, so we talked about at the very beginning about protecting what you're building. And so we're gonna do that, this portion right here is gonna take us through some of the ways to protect what we're building. All right, so I wanna make sure that, hold on 1 second, y'all, let me get a little coffee in and make me a little popsicle in here. I see Monique is on, she knows how cold it get in this office. I'm gonna start coming around here with a blanket in the middle of July. Think of like, where's that crazy lady going with a blanket to the office? All right, so when we're talking about risk mitigation, it's just basically fancy term for reducing the risk. What are we doing to make sure that we safeguard our baby? Remember, the business is a baby. So the things that, and these are going to be some of the controllables. There are things that are going to happen that you just have to have a plan in place to rebound from. But these are the things that you can absolutely do. So you want to use your legal structures like an LLC or your trust and insurance to shield your personal and business access from liability. And as you notice, the word personal is all through here. Because remember, I talked about when you're building a business, when you own a business, you are responsible. This is your baby. This is almost like your child, a 10-year-old going out, stealing a car and running into a building. Guess what? You are responsible for it. So it's the same way with your business. You are personally responsible for your business. So you want to make sure that you have some things put in place to properly separate the two to protect. If you do not have any protection in place, you are going to be 100% personally liable and vice versa, okay? So you want to make sure that you are set up at least as an LLC. So for all of you gig workers, side hustle, persons that do, I just do a little something here and there. It's not really a full-time business. I just do it to make a little extra change. Trust me, I know it because that's, I started there, just doing it a little something, something. And then it just grew. I wish we would have had Zoom back then and somebody was teaching me a workshop. Trust me, I learned, I do have my credentials, like I told you earlier, my degrees and certifications, all that stuff. But I promise you, the majority of, or I guess maybe the reason why I am so passionate is because there was nobody sharing. So that's why I'm always asking people, please share this information. Don't keep it to yourself. There's somebody out there that is putting their last dime into their business. It's sink or swim for them. Don't let them wing it. Please share it. What's for you is for you. You sharing information is not going to take away from your bottom line. Anything is going to add value to you because you're going to help someone else be protected. And I know that's totally off the grid from this class, but as entrepreneurs, we truly are in our own little community. So what we're gonna do, we're gonna work together. But anyway, not even sure why I went in that direction, but you want to make sure that you're set up properly, even those of you who have side goods. It you pay your registration fee, set it up as an LLC, just so that you're not personally liable. You can get in there and fancy it up later, but if so for an example, for a side hustle, let's say you bake cookies and you sell cookies once a month. You like make the best chocolate chip cookies and you just really love doing it. It was your grandma's recipe, and so you're doing it to make little extra money so Susie can go to dance class. I don't know, whatever your story is. Take and get an LLC, get you some insurance to protect you and your business. Do not leave yourself open. You will be on the hook 100%. Somebody eat that cookie, get sick, okay? Separate you and your business. Put your ducks in a row. If you're not sure what structure to have, to just be an LLC, or S Corp, a C Corp, we will discuss that tomorrow on the tax workshop. Or you can watch the replay, shoot me an email, like, hey, I need to set up a session so we can just see where I need to be, okay? But bare minimum, I'm gonna talk about the LLC today, just because it's where we normally start, but doesn't mean that's where you have to, but it's the safe place to start. So you want to set your business up as an LLC, and you want to make sure that you have the proper insurance. Remember, when selecting insurance for your business, make sure that you're checking it not just for the industry that you're in, but also for your zip code, um, and your specific client niche. So it's, for example, if you're a truck driver or you're driving cross country or you're just driving locally, the difference in that is it's the same industry, but the difference in that there's certain insurances you need, some that you don't, certain structures, things that you have to put in place based upon the activity of the actual business. And so you want to make sure that you're properly set up. Your estate plan. I should have had a red star just beaming off the page for this one. Make sure that you have your will, your trust, your power of attorney, to ensure a smooth transfer of access, minimize the state taxes, things of that nature. I really want to, I'm gonna spend a little time here. I want everyone to write this down, and whether you reach out to me or the person that invited you, or you go on Google or you find someone else, I want you to write this down, and I want you to go do your research, find out what it is, have an understanding, and get it and put it in place. I don't care how small your business is. It's called a buy-sell agreement. I want you to go and research that. I know, I don't know which one of those classes, but one of them, I'll have a special guest on. They're gonna go, I want to say the August or probably the September workshop, but they are going to, I'm have a special guest on. They're gonna go through that where they fine tooth comb the interworkings of it, how it's set up, what's some of the estimated costs of doing it, why you should have it. But a buy-sell agreement, if you own a business, if you're selling makeup, or if you're building home, if you are a doctor or lawyer and you have a private practice, or you even work for a hospital, all of the things, I don't care how minute or how big your business is, this is bare basic. This is entrepreneurship 101. Get your estate plan done. The last thing you will want is something to happen to you, and not just dying. Lord forbid you get in a car wreck and you're in a coma for 3 days. Just anything, and of course, something should happen when you're untimely passing. You want your business taken care of. You do not want to leave the burden of your business on someone else. Come on, y'all. Y'all know family. If the family was all working in the business, we probably wouldn't even be on this Zoom because you would have enough help. Okay. So think about it. Put your estate plan in place. Who's going to take over the business, and what do they need, and what do they have the funds to do it? What education, what certifications do they need? What is required of them to take on your business? Or is the state going to swoop in, take your business and dismantle it, or let someone else come in and take all of your hard work? You're 2 o'clock in the morning, you're getting up at 7 a.m., you're traveling, all of the things that you've done to invest and to pour into this business, and if something happened to you, you're just gonna leave it to chance. I don't think so. So let's make sure that you have that. And so a lot of times we take care of it for our personal, and I pray that everyone on here has this done personally. But if not, let's put that at the top of the list, the things to do in the next quarter, in this quarter, before this quarter ends. Let's have your estate plan done, okay? So, but we want to make sure we have that. We want to make sure that you define your ownership, who's going to transfer the plan, who are your successors. Make sure you talk to people. Don't just be naming people, don't talk to them. So you want to make sure that you're talking to them. Hold on 1 second, sorry about that. Put that on mute. That who's gonna be in charge. You want to have all the discussion. Establish protocols, backup system, your key person in charge. Draw a line under draw a line, circle, write down key person insurance. Definitely want to talk about that. A key person insurance is for the person that is holding it all together. Let's say you have the world's best secretary. There's nobody hands down that can beat your secretary. She knows where everything is, how everything works, and basically She really is the lifeline of the company. Something should happen to her or him. Can you go out and readily replace them? Because now remember, they started with you 10 years ago when you didn't have anything. Now they've helped you build it. You bring someone else in, they're gonna do all the things. Chances are they're gonna want a whole lot more than your budget allows for. Do you have your key man person insurance? Are you the key man? What happens if you got employees? They're gonna still need to get paid. So think about those things. And then you want to make sure you have your systems back up, especially if you have a virtual business or a online business, or you capture client data and your computer is like the lifeline of it. You want to make sure that you have some sort of backup system in place, file cabinets locked, those things. And you want the business to not have any interruption. Like I said before, I'm in Louisiana. I know some of you are up north. Maybe you can relate to this with snowstorm, but if we have to evacuate and we have to safeguard paperwork, is all of those things in place? These are some of the things that we just don't think about. Like, hey, we go out and we do what we do because we're great at what we do. This stuff is like not even on the radar. This is not what I want to do. I want to go and do the thing that I love doing. But guess what? We have to take care of the business so that we can do the things in the business that we love to do the most, which is usually serving others. And then diversify your investments. We talked about that. Review your coverage regularly. Don't just set it and forget it when it comes to any of this, really, all of this. Don't set it and forget any of it. And align your protection strategies with your long-term goals. Make sure that you have it tiered and it's not all one and done and set it and forget it. You want to make sure that you have that you got short-term, mid-length, and then of course your long-term goals, and everything lines up according to your time schedule. Now this slide, I'm gonna kind of go through this one kind of quick, kind of get to the next one where I want to spend a little more time. Money saving strategies for business owners. We talked about budget. Make sure you have a budget, create a detailed budget that aligns with your business goals and your revenue forecast. There's that word again. You want to make sure that you know what you should be spending. What are the limits? Are you balling till you fall, or do you have a set system? Track your expenses, monitor, categorize all expenses. I suggest you do it weekly or at least monthly to identify waste and overspending, because you may need that money down the line to do to take advantage of certain opportunities, or just to have an emergency fund. And of course, you want to build your wealth so that you can plan for retirement. That is something that I really want to spend some time talking about. I know I won't be able to really talk about retirement today, but as small business owners, I want to put this out there. When that retirement doesn't mean you're sitting on a porch in a rocking chair doing nothing. And unless that's what you want to do in retirement, you may want to travel. You may want to start another business, or you may want to get into education or public speaking when you retire. So I'm not saying that you have to do nothing, but the thing that you choose to do may not generate income, or not as much income as you are generating now. So you have to plan for retirement now for later. You can't wait till retirement to plan. I mean, people do it, but it's really not the best use of time. Plan for it now. Vendor deals. Don't just be so, like, oh gosh, I can only buy this lotion from this person because but she's charging you $12 more than what it's worth, or somebody down the street is selling the same thing. Negotiate. When there are products and services that you have to use repetitive for your business, for your client, make sure that you're not overpaying, but you do want to keep the value. And if there's a relationship there, that may be some loyalty there for that particular, but it shouldn't be like that for all of your vendors. Check it out. Review your contract, ask for better rates, check out the payment term, tax deductions. We talked about leveraging that, reducing your tax liability, and make sure that you know what credits you're entitled to and what deductions, and that's more of a tax workshop. Cost review. Conduct quarterly cost audits to cut unnecessary subscriptions and redundant services. Some of y'all are paying for stuff you ain't used since last year, but it was a great idea. You saw it on Instagram, you clicked, you subscribed, and you got it. And guess what? It's just like a gym membership. You pay that gym membership, and if you don't go to the gym, that's on you. It's the same way with a lot of these subscriptions. Pay for the stuff that you're gonna use, the stuff that you're not using, and you can apply that to your personal finances as well. You know that you don't Netflix and chill, cancel the subscription, okay? You're an entrepreneur. When do you have time to really sit down and binge? It's like more of a binge watch. You can get somebody else code for that. But you know, you don't have time to watch it every day. All right, planning for retirement. This is kind of where I'll spend probably the larger amount of what's left for us. We have a couple more slides and then I'll be out of you guys' way. All right, so planning for retirement strategies and milestones tailored for business owners. This is one of the key things because I always say I wish I would have known this information. I've been blessed. Like I said, this is year 27 for me. And I probably was doing some side gigs and things prior to, but officially 27 years in business. And I didn't start when I started. No, like I said, nobody was sharing. So when you see me with the bullhorn sharing this information, it's because I know what a difference that this can make. So let's get into, hold on one second. Let me do something right quick. All right. So let's get into retirement. You want to know your option. You know, as a small business owner, some of the things to consider is where are you going? What are your goals? And like I said, if you're doing a yearly review, it's not like it's set in stone, but what do you have projected? What is the goal you're trying to accomplish? Know what your options are. Explore IRAs, 401ks, SEP IRAs, solo K, the best fit for your business. And not just for you, if you have employees, what can your business set up for your employees? And remember, don't ever forget, you own the business, but you also work in the business. So you can be considered sometimes as an independent contractor and or as an employee. So make sure that when you're doing your like on the previous slide, when we talked about setting up as an LLC and PLLC and all those things, that you have your proper tax structure in place, because when you get ready to plan for retirement, certain limitations are for certain types of entities that you set up. So you want to make sure that when you're setting your business up, you're thinking long term. You know, what do I need to have in place for retirement? All those things work together. And I promise you, as I said earlier, it may seem like a lot to take in, and this is like, oh my God, I got to do all this stuff. Remember what I said, whether you're working for someone or working for yourself, you're going to have a whole lot of stuff you got to do, and there's a checklist on every side. So pick your battle here. So let's put these things in place and get it set up where it's smooth, where you're not stressed. I don't want you guys leaving this workshop stressed, like, oh my God, I got all this stuff I got to do. Let's take it one task at a time, okay? Set your saving goal, define your target retirement income, and calculate how much you need to save each year. We need to have your financial independence number. I know you hear that a lot when we're talking about personal financial planning. We use that term financial independence number, which you should know for your personal, but you also need to know what it is for your business. What does your business need to have saved so that if it took a year to bounce back, that the business could stay afloat? And you also want to set your saving goal for retirement. You know, nobody knows when they're going to check out of here. That's for the good Lord to know. However, if you're going to be in retirement 30, 40 years and you worked in the business 30, 40 years, who's going to pay for the next 30, 40 years? So you need to make sure that you know where you stand financially and what you need and from the business later on in life so that you can properly plan and set that up. You want to have a balance to your investment, you know, from what the business reinvest and from what the business put aside for retirement contributions and for saving. You don't want to just do 100% putting it back into the business and never taking care of you for you later. Don't forget, it's not about just you right now. There's also a you later, okay? Um, you want to build a timeline, you know, map out your key milestones, you know, sit down on paper. Let me get my illustration back out again. You want to take the paper and the pen And you want to, wait, it's not showing. I want to make sure that y'all know paper and pen. When I say paper and pen, I mean, I want you to take it and I want you to kind of just write it out or get a whiteboard and just kind of brainstorm, if today the day I start, or I'm doing great, so I think I'm ready for the next level, or everything is a mess, or everything we're good. Whatever your situation is, write it out. What do you want to do for this quarter, next quarter, 5 years, 10 years, retirement? What does that look like? And that's going to help you draw a map and get with your financial educator, your financial advisor, and say, hey, look, this is what I'm thinking. What are the tools? What are the resources? What do I need to do? What do I need to put in place so that I am properly prepared for retirement? Okay. And you want to review and adjust. You're going to probably hear that through all of our presentations. I'm always talking about reviewing where you are. We are some awesome people as entrepreneurs, and we get a lot of great ideas and we start stuff and we're problem solvers. So we see something, we pounce right on it like, hey, I can do that. So we're always evolving, we're always adding, and we're always considering and trying new things. Okay, that didn't work out, or this working out great. So your plan needs to be reviewed and adjusted at all times. Do it quarterly, do it twice a year, do it, just do it. Take a look at it. Because sometimes once you put all the things in place, it's really just become a checklist, a review and check. It's not gonna always be dismantled and rebuild. It's gonna get to the point where now you're able to just kind of check in. All right. Well, I talked about earlier when I mentioned the buy-sell agreement. Remember I told you to write that down. I still want you to research it, and I still want you to have an understanding, because even though I'm getting ready to give you like 5 quick tips about it, it's still not going to be that full. Well, in my opinion, let me rephrase that. In my opinion, it's because it still needs to be tailored to your situation. Okay, so this is basic overview. So a buy-sell agreement, it protects your business interests and ensures ownership continuity if you wanted the business to continue or if you wanted to sell it. So it gives you those options. So step 1, ownership. Define the terms for ownership, transfer upon death, disability, or departure of a partner. So for example, if it's just you, if you're the only owner or you and your spouse are owner, what's the plan should something happen to one of us, whether we pass away, disable, or if it's me and a friend or me and someone that we came into a joint venture with and they decide they want out, what happens to the business now that this person is no longer a part of it? They have a ownership that they're taking with them, or are they leaving it? So you want to make sure that that is clearly defined. Cross purchase, remaining owners, so if it's, whoever's left, may be required to buy out the person that's departing. So if a person passes away and they were married, their spouse is now the assumed owner unless there was something else. Or if your partner, while you're in business, passes away, so the remaining person that's still alive have to deal with the new partner or lack thereof. And so what happens to the ownership, that needs to be spelled out. Oftentimes, small business owners think because it's just me, this doesn't apply. It does apply. If something was to happen to you and your spouse, let's say you own your business, you and your spouse, and y'all are a blended family. I'm just using it for an example. Which one of the children get the business? Your biological children or your children from marriage? All those things have to be spelled out. These are just some ideas I'm throwing out to kind of get the wheel thinking. Entity, the business entity itself or the business itself can buy back the departed owner's interest from their estate. Make sure that's in there if that's something you choose that you want to do, or if the person passes away or they quit the business. Is it where you're going to have it set up to where, hey, we're going to sell this business? Should this relationship fall apart, do I just simply sell and go? Or, hey, I want this business. I put blood, sweat, and tears. I need to already have a plan in place for what happens just in case. a hybrid agreement. Where you can say one can buy the other out. What are the offers, ownership? All scenarios need to be discussed. Hey, if I go first, you go first, or if we go together, what happens? What are the things that we're putting in place? And the funding, where's the money? Who's gonna pay for this? Is this gonna be done through a life insurance policy? Remember, I told you if this person passes away and the wife or the husband wants their share of the ownership, they don't want to do the business, they just want me to buy them out, buy sell agreement. They want me to buy them out. Do I have the money in my bank account, in the business bank account, to buy them out? Can I use a life insurance policy to help me do that? Get what your financial person to answer that for you. Cash reserve, do I have enough money saved up, earning compound interest? Remember the rule of 72, that it can help me buy it out. Or do I have like, hey, we got it set up to where there's an installment plan that, hey, if you pass away, I'll pay your spouse X amount of dollars every month for the next following 5 years after your passing. What is the agreement? Did you put something in place? The types of options you can use to do the buy-sell agreement, or just to have things in place if something happens to someone. You can use a term life insurance policy, you can use a whole life, you can use a permanent, you can use and there are different types of term, different types of whole life, different types of permanent. They're all good. It depends on what's good for you is what you need to discover. So key person insurance. Key person, if the person that is holding the glue together, protect the business from financial loss due to the death of a critical owner or employee. If you own the business and something happened to you, what happened to the business? Remember, the business is your baby. If you have 3 kids, you got 4, because the business is your 4th child. If you have no kids, guess what? You are now a mom or dad. You have a kid. It's called your business, okay? Put something in place. Buy-sell funding. Life insurance can help you fund the buy-sell agreement, okay? Put it in place. Unless you're getting ready to cough up. We talked about the forecast earlier. What if when we do the forecast and we determine that your business is worth $500,000 and you pass away? Does that $500,000 value get lost or wasted? Come on, let's think about it. Buy-sell funding, who's gonna fund that? And if you gotta split that with somebody, come on, you got $250,000 just lying around, and even if you did, is that what you wanna do with it? Consider buy-sell funding through life insurance. All right, coming up on our almost final slide. Let me see here, see something really quick, because I wanna make sure. All right, so I want to make sure I have time to cover that. All right, so our financial roadmap recap, we're gonna kind of cap it up here. And this is a great place to put your questions in the chat, because we got 1 or 2 more slides, and then we're going to be rolling out on what the next steps are. So this would be something that I think you should take a picture of. This would be like your homework. So you want to make sure that you build your financial literacy, keep coming back to the classes, get that registration link, find out when the next class is, register, put it on your calendar, share it. With some people that calling you every 5 minutes, asking you questions, they need to be on this workshop, the next one that's upcoming, instead of you trying to figure it out for you, them, and everybody else. Put them in the class, all right? Financial literacy is going to help you understand key concepts and establish a strong knowledge foundation for your business decision. Now, when you get ready to do something in your business, you're not just winging it. You're moving strategically, and this is how you're going to do that. Okay. Protection, make sure that your business is properly protected, that you have your insurance checked, you got your emergency fund going, you got your risk management plan, you have your strategies to safeguard your business, and most importantly, protect your personal business. All right. Your personal finances, such as your home, your car. The last thing you want is some business error that was not intentional to cost you your home. So make sure you do that. Management, optimize cash flow, manage your debt. Remember I said all debt isn't bad. Some of it just needs proper management. Be strategic about it. Track your expenses. Maintain healthy financial operations. Don't just be swiping that card or writing checks and you haven't sat down and went through the process as to why and how much it's going to cost you, knowing your interest rates and things of that nature. And just because they say you can have it, do you really need the loan? And why buy this equipment now? Be very strategic with your debt management. Growth. Invest your profits wisely, because remember, this is the income that you earn. There is no overflow just going to fall out the sky. This is something that you have to be intentional about. Diversify your income stream. Be open to new ideas. Be open to adding things to your platform that won't cost you necessarily more time, but it will allow for you to have more growth. All right. So be open and learn and be receptive of considering. All right. Apply tax efficient strategies. Remember, by taxes, you want to pay them now, pay them later, or pay them never. That should be a part of your tax strategy, finding out which one applies to you. You also want to reduce your tax liability and you want to build sustainable wealth, and you don't want to transfer the debt. I know we didn't really get into estate planning like I wish we would have had time, but maybe in the next one. But you don't want to transfer the business, transfer home, transfer things, and it's going to be a tax burden on the person that inherited. So make sure that you do your estate planning accordingly. Make sure in your succession that you have a buy-sell agreement, especially if you are in a partnership with someone that is not family. Well, in any case, but most importantly, if you're in business with someone who is not immediate family, that may already be a part of the estate plan. Make sure that you have some sort of insurance in place that'll help you pay for these things. And you want to create an estate plan to ensure that the long-term business goals are met. All right, so this is kind of leading up to the next step. You want to schedule, and these are the things I'm going to challenge you to do, and I hope to see this happen by the end of the week. You want to schedule a review, book a one-on-one review with the business partners of mine that have referred you to this workshop. Reach out to them, get on that calendar, say, hey, I attended this workshop, and these are some of the questions that I have. You feel free to schedule a session with us. There is a section on there that says who referred you. So even if you schedule a review with us, I'll make sure that you are properly connected to the business partner that referred you. 2, connect with the expert. Don't wing it. Even if you are a financial advisor yourself, get you one. Don't be the hairdresser trying to do your own hair. Get somebody to do it for you, okay? But reach out to a financial educator and or an insurance professional that invited you to this presentation. Get with them. Go ahead and connect. Let them be the expert in your situation. But remember, ask your question. Get your understanding. Explore resources. So I put on here that you can go to irs.gov, sba.gov, the mfib.org. It's not .gov, it's .org, and find and any financial literacy platform. The Federal Trade Commission is good too, and get more education and reach out to us here. We have financial education books that we would love to share with you at no cost, and so that's kind of where we are. I'm gonna come back to the Q&A. Just hang on one second. I'm gonna answer some questions for those of you that are online. But I want to talk about this on tomorrow, July 8th. So in case somebody's watching a replay. But every second Wednesday at 12 p.m. Central Standard Time, I host a workshop for entrepreneurs. It's called How Money Works for Entrepreneurs. That's every second Wednesday, unless otherwise, noted. If you go ahead and register for that, you'll get reminders, but we talk about different concepts. So that impact business owners. And so tomorrow we are talking about taxes. Now, this workshop is less than an hour. It's more of a overview, but I do it every second Wednesday. The boot camp is once a month, and it's 2 to 3 hours long because it's really to get more information and to learn more. And some of the workshops that are going to come up are going to be maybe chunks of what we talked about today, broken down into pieces. And so that's what we'll be doing for the remaining of the year. So you definitely want to register for this, and yeah. And also, if you scan the QR code, I want to thank everyone that tuned in live. If you hang on a second, if you're on live, just give me a second. I'm gonna go through this spiel and then we're gonna pause the recording and I'm gonna take your questions live. So if you're not on live, you get them, you missed the live questions if you're watching a replay, but we will reach out to you, send us an email, drop us a line in the chat where you are watching the replay, and we will respond to you as soon as possible. But what I want you to do is scan this QR code. It will bring up our upcoming classes. Now, there's only 2 or 3 classes on there right now. By the end of the week, there'll be more and more classes over the next few days. We're going to be kind of mapping out, because there's so much information and it's good. That means being in entrepreneurship, you have so many options, so many avenues, so many streams of income, so many opportunities. So it's a good thing. So, but what I want to make sure is that you're not overwhelmed. So I want you to sign up for some of these classes, tune in where it makes sense for you, but definitely apply the information. So if you're watching a replay, join us live for sure next time. And like I said, those of you who are on live, hang on a second. I just want to give this disclaimer for the recording. Everything that we talked about today, I definitely want to advise you to get with your financial professional or the person that helps you make financial decisions. If you are married, have a partner, have family, discuss this with them. Let them know what you're thinking of doing, what changes you're looking to make, and how it could impact the family. Get the buy-in from them to support you. And for those of you who are in business, I am rooting for you. I am here for your success. Please don't hesitate to reach out and schedule a session with me. Even if I am not your financial person, I am here to help. My heart is for small business owners. I do a lot of personal financial classes and one-on-ones, but my heart, the heart of heart, I love business owners. Entrepreneurship gave me a gateway to have an opportunity at life to have a better quality of life. And so it is my mission and I feel like my duty is to share what I've learned and to learn more things so that I can bring it back to you, because I don't know everything. But I know some people that do, so, and I don't have a problem with asking questions and bringing it back. So thank you all for tuning in today, and I am going to now tune in to those that are on live. For those of you watching a replay, do not hesitate to reach out to us at any moment. So I'm going to stop the recording.